Welcome to TradeTheMBI.com. This is John. This report is for the 19th. Well, the Fed did it into, well, what was relatively high market values, real estate prices at record highs, and GDP growing with inflation outside of their target range, and they still cut. So the market, very excited about that, is going to break into new highs and keep propelling itself from there. It's also going to have the net negative of skyrocketing commodities. From a NASDAQ standpoint, we broke past that resistance that had been blocking it for the last period of days, and now it's through it and it's allowing it. Now, that doesn't mean you're not going to get moves back and forth within this play, but broadly, you can expect that asset prices are going to go higher because treasuries are negative yield to inflation rate significantly now, and that's only going to expand. That means commodity prices are going to rise, and you can already see it beginning here in gold, oil. All of them are just going to be propelled to a new level simply because you're devaluing the currency, and the commodities never accept that devaluation, and because of that you're going to just get outside expansion within those ranges, and there's just no stopping it. Obviously the devaluation is going to help other currencies, which will affect trade as well, making the dollar cheaper, so trade can be a little bit more improved. But gold is going to skyrocket from this. It's not going to happen overnight. It's going to start to build, but it will continue. This is great for cryptos as well because they're all going to be alternative classes to avoid the devaluation that's taking place. ETH about to break past the 23% there for its move. When we look at it from our intraday, 50K, we had a little bit of softness going into it. We filled back in. That was off of that previous MBI white spike, and now you're just in golden zone. It's been a buy early on, and that was pretty much seen in the pre-market. That's where we're at right now in the European session before the open comes, but you can see how the Fed announcement was a little rocky. They tried to squeeze some people out, move them a little bit short, but overall, it's just a net positive overall. And then, right in time for the election and that, which strange, not going to do that much because it's going to take too short a time period. But you could see the quicker bump in oil prices relatively quick, and that will spur that kind of movement. So, broader terms, economically, it's a disaster. I know a lot of people would be happy from a short-term standpoint, but just bizarre. But the Fed, they think they know what they're doing, and doesn't make a lot of sense if you believe what they say, how the economy is good. Then what are you cutting the rates for? It doesn't make any sense. So, as always, anything relevant, I'll put in the Skype chat. Have a good one. Trade well.